How do you tell whether or not someone is a real business person or a scammer that's just really good at selling?
Sean, good. Thanks for having me. That's a really good question. Um, One I haven't thought of, but it's something that we have to in the process of diligence for a founder. So when I just reduce that question down to how do we do things at MVP Capital? You may have heard me say this before, but we're all about the founder, his or her experiences in their past life is where we spend a lot of time trying to underwrite essentially the answer to your question. It's not just is this person a real business person, but does he or she or this team have a desire to go and build a big business? Which is similar to your question of like distinguishing between a scammer and a business person. It's more for us trying to understand what are the values, what are the interests, what is that person's why to go down this path of an entrepreneur, to want to build a big business. And I think in the discovery phase, and I would call that phase one of getting to know a founder and or a company, you can fairly quickly sniff out what that person is trying to achieve very early on. And we have to use our best judgment, which is often infused by past experiences of having dealt with scammers and past experiences of having dealt with very successful business people to further help us understand if we're dealing with the real thing or not. Does that make sense?
Yeah, do you have any specific examples of someone that you realized was a scammer before you're like, I want to give this person a check, and then you're like, no, they're a scammer. You like figured it out.
Honestly, I would probably have to think a little longer than the time we have allotted here. Um, but I fortunately haven't come across a scammer where I've had a burning desire to want to invest. It's usually been, this doesn't feel right. These data points don't match. Whether it was in my prior life or at MVP, where I don't write the check or I don't make the investment. But I've yet to have made an investment and have realized that this person was a scammer. And I think we also owe it to ourselves to draw a clear distinction between a scammer and a founder who's building a business and it did not go well or did not go according to plan. Those failures will happen. I wouldn't have classified any of the investments I've made or thought about making to have a desire of backing a scammer.
Hey, business leaders and marketers, what if your brand could be featured right here? This ad spot could be yours. This channel is watched by a dedicated audience of ambitious founders, executives, and professionals who are actively looking for tools and services to help their business grow. If you want to put your brand in front of this highly dedicated audience that's difficult to reach, I'm currently looking for a few strategic partners for the channel. To learn more about sponsorship opportunities, click the link in the description. Let's grow together. How do you feel when someone isn't willing to disclose to you the other investors they're actively talking to? And I have a follow up for that question after.
I don't necessarily have an opinion, except for if they're, we tend to be a lead or a co lead in our process of investing. And so I don't necessarily desire for them to disclose upfront because we're often competing. If there is a term sheet that's on the table, we're competing, and I wouldn't expect for that founder to disclose upfront, who they're talking to because they're trying as well. And being a good business person, they desire to get the best price for their business. And so I don't have a strong opinion. I often want to know, as most investors would want to know. But, like, listen, I'll ask the question, hey, I'll give you a scenario. Vaughn, like in VP, we have a lead term sheet. And then the questions are like, hey, are you open to a co lead? And then are you open to sharing who that lead term sheet is? And so, like, one could suggest that if they do not share, maybe they don't have one on the other side, but we've got to treat every communication. We're going into these investments, we're going into these meetings with founders with the best interests and intentions in mind, and that there's going to be trust on both sides. And so, I don't have a strong opinion. I do desire. I wouldn't mind knowing, but I don't cast judgment on a founder who doesn't want to share because they're performing like business people.
So the reason why I was curious about your opinion on this is because I'd heard that if you know, not you specifically, but if an investor hears of another investor that the startup is talking to, they may go and talk to them and try to arrange to offer the same deal so that the founder ends up not really having much choice, or talking to them and sharing their thoughts on this founder, and that could potentially negatively impact the founder being able to invest from the other investors that they're talking to, because you may have a negative opinion of them, or you're unconvinced where the other one is more convinced. And so that basically, by not disclosing the investors, they're protecting themselves from any of the investors bleeding into the conversations with the other investors, whether that's negative or positive.
Here's the reality. For us, we're collaborative. The environment, oftentimes at the pre-seed and seed stage, which is where we're investing, it's a collaborative environment. The onus is on me, the investor, the potential or the prospective lead investor, to do diligence and understand customers, co-investors, understand as much as I possibly can about this founder or this founding team and the business. And that includes discovery on who could be potentially interested, or if there is an existing term sheet, who is potentially leading, currently, leading the round. And so in that scenario, on my own, if I learn of another firm involved in the deal, then yeah, I would probably, especially if it's a friendly or someone we've done business with or someone we desire to do business with, I have to make a call to not jeopardize the interest that I may have in the deal. I have to make that judgment to then go and call that investor and further explore who that investor is, if they're really interested, if there's truly a term sheet. There's some risk there because the founder may not like the fact that I'm talking to their potential lead investor or prospective investor. And so in that scenario, it's a judgment and a feel that you have to get comfortable with. But I wouldn't, in that scenario, look to ask the founder, because they're smart enough to realize that there is some risk in a party deal, that the terms are set and he doesn't get a better price. He or she is going to desire for independent firms to do their work and come to the table with a term sheet that represents the value that they're willing to pay for this founding team, their idea, and the prospect of this being a bigger company. And so, as a former athlete, I'm never afraid of a little competition. And so, whether it's known or unknown, I think it's fair game to do the work, understand who's involved or not. But at the core of what we're trying to do is make our own decisions based on having high conviction or not, which would lead to us making a decision to offer an opportunity to invest and partner with that founder, or make the decision to walk away.
I think founders are unfortunately not as aware about that as you may think in terms of the term sheets and communication, because I think they look at it as, if I tell you that I've got this investor I'm talking to, generally it's because it's real, like they're not going to screw you around. But that they may not understand that another investor would go and actually reach out. So I think they aren't aware of the potential negative ramifications of the action of telling you. And that's one of the reasons why I'm asking this question and putting it out there for people, to understand in order to potentially protect themselves, or to build a better relationship with you. Another thing I had heard recently was that, if, let's say I have 5 advisors on my deck and 4 team members, right? Are you going to reach out to them, or do you know of investors reaching out to these people to see if you're actually an advisor for them? Are you actually an employee of this company? Do you know these people, or are they just throwing your names? For example, because I used to work in the blockchain industry 10 years ago, and there were people, AI didn't exist yet. So you couldn't fake images of people. You would just steal the images from stock, like if it like Chinese, for example, Chinese companies, right? I was living in China and I was working with blockchain companies, and I'd catch them like going on LinkedIn and downloading images of an old white man just to make themselves look credible. But the white man didn't know who they were. This American guy, this European guy, they had no idea, right? And so they were trying to make themselves look better in order um, to raise money from investors, or to sell to potential customers. Um, so yeah, I guess, is that part of your due diligence is reaching out to these people that are on your deck?
Yeah, so I'll come to that in one moment. I do want to add one point of not necessarily clarification. There are often times when we are at risk of, when we pride ourselves on trying to get the work done as quickly as possible and making a decision, a well informed, data driven decision as soon as possible, which oftentimes will hopefully lead to us being one of the first term sheets to be offered to a founder where we have high conviction. We also recognize that there's a risk in doing so, because if that founder decides to share that it's MVP Capital as the lead, perhaps who he shares it with is a friendly, and they say, as we'd hope, those guys are freaking awesome. They're so founder first. They know vertical AI. You should go with them. But we also recognize that, we don't have friends throughout the entire ecosystem, or we don't have, relationships with everyone. Where someone could say, this New York City based firm, we've never heard of them. They're on their second fund. Why would you go with, a smaller fund? So there, it cuts both ways. When we are often first, we know that there's risk in someone saying something about us if that founder decides to share. And then on the flip side, if they share with us who their term sheet is issued from, we are going to have an opinion, and that sometimes can influence our decisioning. Now, to pivot to your second question, which is actually a really good one, right? So for us, when we see an investor deck, and by the way, we spend some time on the deck. We spend most of the time on trying to understand the founder, the founding team, their journey. And so the deck is just like one piece of the information that comes across the trends that helps us understand like whether this is a good investment for us to make or not. But in the sense, like in the case of like having advisors, the first question is like why? We're investing at the pre-seed and seed stage. Is there something like, and we're not doing things like life sciences, we're not doing biotech, we're doing software. So at that stage, the first question we have is like why? Are they truly value add that early on in the journey? Or are you using it, to your point, of like trying to get attention because you have the former director of the CIA as you're building a cybersecurity firm? Right. So that does matter. And like, sure, if it's an easy thing for, Dan, Skylar, or myself to do in the process, which is like, hey, I know that guy, or I know that person. Let me reach out and see if they're really involved, or if it's nonsense. The worst thing for a founder to do, and I hope that a lot of these founders are aware of it, is to put non-relevant professionals in their materials that are actually not accurate, because that will get sniffed out. And whether it's your pre-seed or seed investor doing the work or not, at some point that you'll get called to the mat on falsifying relationships. And I would just encourage founders to not do that. And then I would also ask founders at the pre-seed and seed stage, why is there a need to have an advisory board so early on in the journey? And there could be a valid reason, which we're totally open to, but we just don't see it as often if you're backing just a good founding team, because you're backing the horses, not the advisory board, who you may have access to.
I've heard that boards of advisors are important because even if they don't invest, they may have access to investors. They may have access to potential clients, or they may have access to potential executives that you could hire once you've raised more money, things like that. Um, at what point of the journey do you think advisors become justifiable if at not the pre-seed or seed stage?
Be clear, I think they have a role. It goes back to that earlier question of like just what is it, right? So, when I think about what we've done as a firm, we've incorporated, as I've shared and you may have read, this galaxy of CEOs of corporations, the corporations themselves, leaders in private equity, et cetera, to try and be value add to our founders when needed, as early as possible. And so that's a form of an indirect access to an advisory board where you may be looking to solve a particular pain point. It could be hiring, it could be product, it could be downstream financing, it could also be introductions to customers. Oftentimes, founders should be picking their partners, their investors, to be on this journey with them who can be a little more than just capital when needed. And at the same time, they should be picking partners, investors who they like, who they want to be in the foxhole with for the next 10 or 15 years. The advisory board role, I mean, do they need to be like a formal advisor to what you are doing? I don't know the answer to that question. And I'm okay not knowing the answer to that question because every founder is going to, most founders are going to build their businesses in their own unique way. And some of them are going to want, 5 go to market advisory board members because they recognize that their investors that they're bringing on, that's not their strength. This is a gap on the team and it's needed from day one. That's totally fine. What I would be concerned with is just like the arbitrary, like members of my network as a founder, they're in my materials to help me raise capital or to help me get a customer. Also very valid, but for me, the investor, I would want to just like dig deeper on the depths of those relationships. And to be also very candid, I don't think I've made an investment. And I don't think anyone on our team has made an investment where the strength of that advisory board was like the driver in our decisioning. It might be a data point, but the driver in our decisioning is this founder or is this founding team, are they badasses? And do they have a right to win? And are they going to wake up every day going to do it? If they're going to wake up and go hang out with the advisory board, we're a hard pass. But they do have a role. And it could be early or it could be late. It's just a matter of like, what are you using this advisory board for? And can you defend it? That's how I would be thinking about it.
What do you think about founder salaries?
Mm.
I hear so many opinions. I see investors getting really excited about how their founders don't take any money, and I see other investors saying they should get paid X amount, and other investors say I don't care what they get paid as long as they do the job. Where do you sit in that?
It's a great question. And I've struggled with that question because, the origins and the stories we do hear about are like the glorified stories of, I paid myself nothing, we bootstrapped it and we were on the balls of our ass with like no money. And all of a sudden we onboarded these 5 customers and boom. And then I was able to pay myself something. Love those stories. But that's just not the reality for all founders. Some founders are wildly brilliant. They have a great idea. They've proven themselves in various parts of their lives, but they can't afford to go without a salary. Now, do I think you should be paying yourself, you know, what a senior VP at, Goldman Sachs should be making on a $5 million seed round? Probably not. But I do think that there are some really talented founders who are oftentimes held, I think they're talented individuals who are oftentimes held back from fulfilling their desires to be an entrepreneur because we've heard these stories of like not paying yourself. I think it's, if you can do it, great. And I think for the investor, it does show yourself as like a scrappy, gritty founder, but some founders can't do that. And that's okay. So I think somewhere between the hero story of I'm not paying myself, I want all the capital to go into the business, to brilliant idea, I've got this team, but we've got families, we've got rent. I was, I was in the military, and I went to business school, and this is my, I need a job, right? In addition to me having a brilliant idea, we have a little bit of that across our portfolio. Founders who've had meaningful exits, who are paying themselves a de minimis amount of capital and have gone the route of building out the team and the infrastructure, and they're doing well. And we also have founders who literally went from the military to business school to building a company. And I would be hard pressed to be critical of that founder who served our country, who went and got, a higher education and decided to go and build a company and be an entrepreneur, to not pay him or herself something meaningful. I would be hard pressed to not be supportive of that. So we're all over the map inside of our portfolio. And I might be all over the map with my views around how founders should compensate themselves. I don't think there's a one form answer for that question.
Right. So it sounds like you're supportive of them. It depends on their situation. You let them decide. As long as it's not ridiculous, you're cool with it.
The situation, the business, the budget, the growth goals. So it's circumstantial around the overall. That's one component. Team compensation is one component of the overall business. And so it just has to be analyzed to make sure that the alignment between the investors and the management team, the founding team, they're aligned. And so that's how I think about it.
So you invest in AI companies, and AI tools are making it so that founders don't need investors anymore. They can just bootstrap their business to profit. Why do people keep coming to you for money when they don't need you?
I look, I talked to a group of students the other day at Rutgers University, which, by the way, I think is a sleeper and hotbed of talent that will kind of circulate the ecosystem. But I did say to them, like, not every great idea needs to be venture backed. If you have the ability and you have the desire to not want to raise capital from venture capitalists like myself and others, that's totally okay. And I think we often don't think about my business as a VC. Like, we are too running a business. And so therefore, even in the world of building an AI and using AI tools, and the truth of it allowing for founders and companies to be more efficient, getting to scale much faster on less cash, those things are all true. But we also bring more to the table for founders, first time founders, second time founders. We bring more to the table than just capital. There's also resources, there are also networks that folks have. So I think founders have to think about every now and then, is my business or is my idea, before it even becomes a business, is that likely to be aligned with the venture capital model? And do I want it to be? If the answer to those questions, and that means like scale, faster, efficient, big markets, big exits, speed, those are some of the attributes that come with being in our business. And if you're a founder and you don't want to do that, that's okay. But I do think that we play a very meaningful role in backing founders with great ideas who will build generational companies over time. And they should get all the credit because they're the daring entrepreneur doing it. So I think there's a world where, good ideas don't need venture capital, or founders don't want it, and that's okay. There's a place in the ecosystem for a lot of good ideas.
Why do venture capital investors struggle to tell founders the truth when they don't want to invest in them?
Because we're human, like let's just be honest. Like, would you, how often do you tell your wife you don't like the outfit that she's wearing, or you do it in a way that is more palatable? Or like,
I don't have this. I don't have this filter. I tell people what I mean and what I say, and people either really hate it or they really like it.
I think that I think that's good, right? But I also think that we as humans struggle every now and then by saying like, look, man, I think this idea is a good idea, um, but I don't like you, or I like you, but I think this is a terrible idea. The other part of that is there's a reason that power law exists in our business. We are going to be more wrong than we are right. And so I think the honest truth is this is not a fit for us. Now, every now and then a founder wants to know why, but I don't like it doesn't fit. If you want to know why, oh, it doesn't fit because we're not interested in the space. But I think a lot of times if you're passing at the pre-seed or seed, it's either the idea, you're a specialist VC, so if you're only doing healthcare and the founder's pitching you a fintech business, then that's an easy one.
Sure.
Or it's just like I don't vibe with the founder on that initial call. It's a harder one to say. Like, yeah, man, I don't like you. Or I just think your pitch was weak. What's the upside in that? I also think that there is a place to be empathetic with founders who are doing the hard stuff. These guys are they are sacrificing themselves to go and try and build a company. That is hard. And I don't want to be the guy poo-pooing your idea because maybe I had a bad day. Maybe I'm not seeing it clearly. So like I'm not interested, you know, this idea doesn't resonate with me. I only do, two-person teams. You're a solo founder. I think if there's a way in which you can say no without being, and I think there's a way you can say no and be direct and doing it with a level of empathy and not being a jerk. So that's all. I don't think you and I disagree. I just think that the delivery for founders who are doing something wildly courageous should be handled with some empathy.
I think they deserve the truth, even if it hurts. Because if
But that's my truth, Sean.
what do you mean?
That's me. That's if I think your idea is like not going to work, that's just my opinion.
I want to hear it. If you think it's not going to work, I want to hear it. So, for example, I have an idea. It's not. It doesn't need to be venture backed. I'm testing the waters right now, and I went to a few of my friends that are in the e-commerce space. It's not an e-commerce idea. It's a business that would serve e-commerce brands. And I know a few people that serve e-commerce brands in various capacities. And so I went to them because I trust their advice about this. And two of them were like, yeah, this is actually a really big problem that these companies have. This would be really important. And one of them, who I value his opinion the most, said, I don't think this is new. I don't think this is unique. I don't see it being scalable. And I disagree with him, actually. I think he's seeing it from a different point of view, which is fine. I value his opinion, but I got it validated by three different providers, actually, and a lawyer who said it was legal to provide the service. So I'm going to keep pressing on with it because I think it's a viable business, you know, even though I trust his opinion. But the fact that he told me, it's important because I appreciate that. It gives me a thing to think about, right? The problem with AI is that if you don't preface your prompt to the AI to be bluntly honest with you, the AI is going to agree with you every single time you say, hey, what about this? What about this? What about this? And when you try to have a conversation, it's giving you information that's not really helping you. It thinks its goal is to be helpful, and so it won't tell you to your face unless you demand it to do so. That
So Sean, the only pushback there, and if you allow for me
sure.
to do that, is we don't have a lot of time. Also, like I see hundreds of deals a month, right? And so to use my constraints or my assets that I have is it's my emotional energy and my time. And so if I regularly am giving like deep feedback on every single deal of like, Yeah, I just don't think it's going to work. That's going to prompt the founder to say, well, tell me why. And I'm going to go down that rabbit hole of like having a lot of discussion with hundreds of founders, which I don't have the time
Sure.
for. The other part is our track record as VCs. Again, we have a higher loss rate than most businesses. And so again, for me to tell you I don't like your idea, I don't like your idea for me. It doesn't mean that you shouldn't stay on the hunt and find somebody who you can grab their attention, their time, and their money where your idea would resonate with them. So it doesn't work for me. And I'm often wrong. I'm almost, I'm not paid to be wrong. I'm paid to use my best judgment to be right and generate like alpha and to generate like massive returns for the constituents I serve, which are foundations, their university endowments, etc. It's my team who all have carry in our funds, right? But the reality is, I don't have time to get off a call and give you like a deep dive. I'll give you a deep dive if I've gone deeper and then I ultimately didn't get conviction. But like the cursory commentary of like, it's not going to work, I just don't have time to do it.
I mean, I definitely understand that. And I agree it's not fair for an investor to go deep into something like that with someone. I guess what I was getting towards was like, I've heard investors say, I don't have conviction. And founders are naturally curious people. And
Yeah.
so what does that mean? What don't you have conviction about? Like for example, I have someone who has a 1 million ARR business, and they have a bunch of people that are in their sales pipeline. They have a team that's growing. The business looks really great. And a lead investor didn't have conviction, but wouldn't tell us what that meant. So how, as a person who's working with this founder, and for the founder who's every day trying to build a business that will attract investors, how am I supposed to advise him, and how is he supposed to be a better founder if we don't understand why the person with money doesn't want to give us money when the I don't have conviction doesn't mean anything. That's all.
I would say that not having conviction at the pre-seed or seed stage, which is where we invest, is oftentimes code for not liking a person is subjective, but not having belief in that person's ability to build a big business is often what that is code for. And but be clear, it's for that person at that time in that moment. And so founders should just understand at the pre-seed and seed, it's often finding, you got to kiss a lot of frogs, but finding the right person, and you get lucky at the right moment, who woke up thinking about commerce enablement for some odd reason, and you're and you're building in the space, and then nirvana hits. You've gotten to that investor. That investor has gotten to you. You aligned in that moment. But if Vaughn is like, you're building robotics, and something on that call is, yeah, you know what? In that moment, I didn't like you. Like meaning I didn't have conviction that you are the right person or the right team to go and build the business. Founders, I do it as a GP. I talk to LPs. The things you hear, my pipeline is full. I have other priorities. Well, also that means I'm not a priority, and that's
Right.
okay. So it just means that at that moment, I'm not a fit. I won't go away. So I think it's okay to just, as a founder, as a GP, to understand that as much as we talk about AI, we are still the humans in the loop, and we're making judgments on other humans. And that's just the reality of our respective businesses until something changes. Humans are highly unpredictable. And that's just the unfortunate reality.
Last question I have for you. How many investors actually want to see the pitch deck on the first call versus want to have an actual conversation and get to know you as a person?
I can't speak for all investors, But I think leading with an investor deck, I think is a flaw. I think the founder should first spend the time, 30 minutes, 45 minutes, if that's what's booked. I think the time spent is explaining your story. You're building in the trucking vertical and you're managing accounts receivable. Who are you? What's your authentic story? Why are you the right person to build this business? How did you find your co-founder? What is the story there? Do you have a technical background? Are you more business development focused? I start 98% of my founder meetings with, who are you? So even before the pitch deck, founders are often, because it is a small amount of time that you have to, the pressure builds for you to go and tell the VC or the investor why you're so great and why this business is going to be. I don't think I'm different here, but I start my meetings with, who are you? Because this is a 10, 15-year journey. And before I get to the market size, the product, I've got to get comfortable with and get conviction, as you said earlier, with the human who's building the business. So I think before you get to the deck, the perfection around your story, your why, is more important, I think, um, as you're talking to myself and my peers in the business.
Thanks for watching. If you liked this insight, I've handpicked another video for you right here on the screen. For more actionable strategies that get you real results, hit subscribe.